Not surprisingly, the local reaction to the dramatic share market sell-off has been mixed. Many believe Australia's exposure to Asia will shield our economy from global downturns, but others are not so certain, given that our share market has fallen even further than Wall Street in the past month.
Despite, or maybe because of these uncertain times, thousands flocked to an investment seminar in Sydney. When it came to reassurances about our market, the Prime Minister leapt in.
But I would say to Australians, the fundamentals of our economy are strong. Low unemployment, low debt, a budget coming to surplus.
But the peak body representing shareholders says now's the time for caution.
I think people thought that we were totally immune. I think, unfortunately, as part of the developed world, what we're seeing is that the woes in the US and Europe are impacting us.
Others say the important thing to remember is that the share market value of companies has dropped, but the inherent value of their assets has not.
The world's not going to hell in a handbasket. What's happening is there's some concerns, there's some fears that recession's just around the corner. But the key thing about value is that it remains the same.
What we saw in the Australian market yesterday was really the onset of fear. We moved from a period of uncertainty, a lot of questions about the US and Europe, to a state of fear. When there is fear in the market, you see huge volatility.
There's been a sharp sell-off in global share markets in the past week, but unless you've cashed in your superannuation or sold some of your shares, you haven't actually taken a loss. The experts are saying now's a very good time to get better educated about what you do with your money and the risks associated with different types of investments. Even if your only market exposure is through superannuation, you can play a big role in that investment.
If these tough times or scary times make people get more interested in their super, if you can find a fund that outperforms by 1% what you currently got, that could end up being $100,000 or $200,000 over the life of your superannuation.
Chinese investors say Australians can also learn from Asian investment strategies.
They want to look after their own money, so they would prefer to know what they're doing, what the money is going to. So, yeah, in some sense, let's say they're more active.
For times like these, there's an even simpler strategy.
Buffett's absolutely spot on. When everybody's greedy, I'm fearful, and when everyone's fearful, I'm greedy.
Peter Switzer says if you've got the money, now's the time to buy. Marcus Rubenstein, World News Australia.